In this video, I'm going to talk to you about the 6 things that are affecting the price of gold on a daily basis. How you doing, everybody? Welcome to Empire Precious Metals. Thank you so much for tuning in. If you haven't already subscribed, please make sure you do so and blast that notification bell. That way you get updated with any new content. Today I'm talking about the yellow stuff, gold, one of my favorite things to stack. And right now we're seeing that the price of gold is sitting at $1,650. Early this morning, it was up around $20, and the recording of this video is happening on October 17th. What on earth is affecting the price of gold? I mean, it seems like gold one day will drop like $20, $30, $40, and then the next day it goes up $20, $30, $40, and then the day after that it's down 10, and the day after that it's up 30. It's like you're getting whiplash with everything that's happening with the price of gold. And I found this article that's going to show you the 6 factors that affect the price of gold, and they are right here. I talked about this. Get out of here, pop-up. Show notifications? Sure, why not? The other day, I did a video talking about the things that affect the price of silver. And so today I wanted to talk about the things that are affecting the price of gold. And we know right here, supply and demand, it's not a surprise. Gold prices, like any other good or service, are subject to the laws of supply and demand. The higher the price, the lower the quantity demanded. And the higher the price, the higher the quantity supplied. Equilibrium is where demand and supply interact, and that determines the market price. Okay, so we kind of know this. This is economics 101, okay? Supply and demand. And we saw with, COVID, when everything was locked down with the mines, the refineries, shipping, local coin shops, you name it. When the doors were closed and businesses were shut down, we saw a big demand for this stuff, and that's because business wasn't happening like normal and people wanted to get a hold of that silver and gold. They were very fearful, and so we did see prices increase. But what else is affecting the price of gold? Inflation, not a surprise. Those of you that watch anything that has to do with stacking know very well what's happening right now with inflation. Inflation is at around 8.5%, and because of that, what's happening is the Fed is continuing to raise their interest rates, and thereby what's happening, even though that's battling inflation, because we do want to see inflation get under control, but as stackers, what happens is this stuff right here, our dollars are becoming stronger. And when you have a strong dollar, you're having weaker metals. So, it's kind of like a catch-22. As stackers, we want low prices because we want to be able to stack and accumulate more, but at the same time, we want to see prices go up. And that way we don't feel like we're actually losing on the money that we put out originally. So inflation, the growing cost of goods and services, is referred to as inflation. In an inflationary economy, where we are right now, it's believed that investors prefer gold to cash because it's generally stable. As a result, both the demand for gold and its price goes up during such times, although we're not seeing this happening right now. I think with hyperinflation, this does not seem to be true. At least right now, it's been really the opposite. Uncertainty. Yes, definitely uncertainty plays a big role. The majority of investors despise economic uncertainty and would gladly pick safety over risk in such circumstances. Uncertainty is bad for investors since it makes it difficult to forecast future outcomes. As a result, gold is frequently employed as a hedge against inflation, for it retains its value effectively regardless of economic conditions, and it's said to be one of its advantages. Again, right now, though, what we are seeing when it comes to this whole hedge thing, it's not really acting like a hedge against inflation. Now, in terms of uncertainty, I wouldn't be surprised if we go into a recession and see the prices of metals increase. That tends to be the case. Usually in a recession, we're going to see prices drop a little bit, but gold and silver tend to rebound faster before the stock market follows it, and then the job market follows it after that. Currency movements. Okay, so gold prices can fluctuate due to currency swings, particularly the US dollar. It has an inverse relationship with gold, which is what I just spoke about a moment ago. The US dollar is the world's reserve currency and possibly the most widely used denomination. When the value of the dollar falls, gold prices rise because the rest of the world's currencies gain value. All right, so strong dollar, weak metals, weak dollar, strong metals. Very easy to remember. Now, investment demand is another factor, one of the 6 things that affect the price of gold. Remember that gold investing comes in many forms. One of the most common gold investment vehicles is exchange traded funds, ETFs. They function just like trusts. They're traded on an exchange just like you would trade stocks. ETFs aren't only represented by private entities, but mining companies can also own and trade ETFs. Now, demand for ETFs fluctuates as well. ETFs have a lot of gold reserves too, and the demand for gold from these investment vehicles can cause significant price movements. ETFs are relatively common, especially in America, and the market is believed to still be growing. Now, stackers don't really invest too much in ETFs. There are probably ETF funds in some of your retirement accounts, and some of you may very well be opting to invest in exchange traded funds. But when it comes to actual physical metals and stacking, we like to actually hold on to the physical stuff. We as stackers believe if you don't hold it, you don't own it. And there's just something about having that silver and gold in a physical form readily at your fingertips says a lot. So investment demand. Also, global jewelry and industrial demand. So large countries such as the US, India, and China require and purchase large amounts of gold for jewelry production. But this kind of goes along with the whole supply and demand. If there's a high demand and a big consumption of gold, then you're going to see prices go up. And then the converse to that as well, right? If you see less demand, and in a recession, you might see people pull back on those purse strings. They might not be spending as much money. They might forego buying their husband a brand new luxury watch or a beautiful new necklace for their wife because things are looking uncertain with the job market and with the economy, and they want to kind of hold on to that cash. So in that regard, you might see less silver and gold being purchased, okay? But in terms of like physical bullion and coins and things like that, people will purchase this in times of uncertainty because they just feel safer having it. So it's kind of, it's kind of an interesting relationship between, jewelry and things like that. But I'm curious as to what your thoughts are. What is the one item on this list of 6 do you think is affecting the gold price the most? Let me know in the comments down below.